everyone. I hope that you're okay. This is GWPFX Analytics. Best predictions, best rewards. So the topic of the day is basically on risk. So what it means to have a risk, what it means to manage a risk, what it means to forecast a risk, what it means to know about risk. So I have learned a lot about risk, and I know what it means to risk what you have and end up with nothing, to risk what you have and end up with something, but still not appreciate what is presented to you. So basically, risk is defined by the uncertainty of something wrong occurring to your invested funds. So what it means when I say that there's something wrong occurring, it could be losing, because it's a matter of winning or losing. So when you lose what you had at the beginning, of course it's a loss, and it means that there's something wrong. You did something wrong. You didn't analyze to understand. You didn't take proper steps to actually understand the risk protocol. So I want to emphasize more on what I have learned from the availability of the financial market. The availability of the financial market is that the market is always available for you to do whatever you like. You can do whatever you like in the market. You can put your money there and do nothing. You can put your money and play with your money. When I say play with your money, I mean that trading with your money. So problem comes when you're trading the wrong stuff. You're trading just because you are trading. You just want to trade. You don't trade to gain something from the market. You trade with the hope that you're gonna gain. However, you do not follow the protocol of risk. So that's where you find yourself losing everything because of greed. You don't accept what you are being given. You want more. You're always staring at the market. You don't have hope. You observe the real-time data of the market. So tell me, if you spend your whole life staring at the chart and executing trades all the time, is that even trading? No, it definitely it's definitely not. It's not, because you don't have a strategy, a plan that I focus the risk to be this, and I believe that this will happen. So you wait upon that happening. When it happens and you win, it means that you are actually a successful person. You are better than what you were before. Okay, so the market is always available for me and you to access, for us to execute our trades. However, let's not waste time executing trades and staring at the market when actually we know that the market is unpredictable. So we have the abilities, we do have ability to make decisions. However, our decisions are based on uncertainty, uncertain future. So anything can happen, but we have hope. So we must try hard to control our fears and have a little hope that, since the future is uncertain, we believe that with the uncertainties, it will come in our favor that we win. So the next thing that I wanna look at is how high and how low. So given that this is a high risk, how high and how low means that your risk is defined by your lot size. So lot size is definitely how high and how low and how long. So when you increase your lot size, yes, the returns are gonna be higher. When you increase your lot size, it means that currently at that time you are putting a volume on your risk of losing the money. So risk is definitely a loss. Risk is loss of what you had before. So you increase your risk based on the chances, the likelihood of what might happen, what your hopes are. So if you have higher hopes, that the market is gonna reach this point after 2 months, so you increase your lot size and you increase your time interval. So meaning that now you are willing to wait for that period of time for the market to move and go in your direction. So this process happens randomly. It doesn't mean that if today the market goes up, tomorrow the market goes down, just like that, goes down and up and down and up and down. It doesn't mean that, the market will never reach your predicted interval, a predicted price, or yes. So right now I've explained like how do you define your level of risk, by your lot size and time interval. So now I wanna explain something else to you, which is a process of risk management. So how do you manage a long-term risk or a short-term risk based on a larger lot size and small time frame? So identify the risks, analyze the risk, evaluate or rank the risk, treat the risk, monitor and review the risk. So identifying the risk is basically a simple task. It means that you go and analyze your chart. And judge your level of risk. You judge your level of risk. Either it's small, medium, or a higher risk. So there are 3 levels of risk. So when you identify, you define like how much are you willing like to lose. you define how much are you willing to lose when you place that stop loss. So stop loss availability means that you can protect your funds. You can at least define how much you're willing to lose for and how much you're willing to earn in the future when the market actually moves. So that's how it is. You define your risk, you identify the risk. You say that you are risking 400 points, you know, on this amount of lot size, and it's gonna be this amount. It's gonna be $400. So that's step number 2 is analyzing the risk, which I've just explained right now, and evaluate and rank the risk. You evaluate. When you evaluate, you know how much you're gonna lose, because you have now analyzed the risk and you identify that this asset is what you want to invest in. So it doesn't normally mean that the risks are for foreign exchange market only, cryptos, everything, every financial market. So treat the risk. How do you treat the risk? So you must treat the risk. You must know how much you're willing to lose and if it's going to create an impact. So what kind of an impact it's going to create? You're going to lose a lot of money. You're not going to eat anything in the future. So meaning that you are risking a very important money, a money which could be used to do something better. You monitor and review the risk. You go back again, you say, no, let me analyze again. Let me check, let me hear what the news say. I must monitor and review the risk now and then so that I can see if the market has actually hit my stop loss. You treat the risk. How? You move your stop loss randomly. You know that right now the market has gone into your direction. Now you shifting the stop loss towards your favor, meaning that you're reducing the risk bit by bit until there's no risk. It's just the market alone. So that's the process of risk management and risk as a whole. So this is GWPFX Analytics. Please press that subscribe button. You will hear a lot from me. I will be posting some cool stuff. So this is just the beginning, guys. I will be like updating you on new trends, on new things in life. So it's gonna happen. It's gonna happen. We're gonna win. We're gonna minimize those risks and we're gonna make a lot of money. So please subscribe. This GWPFX Analytics. Best predictions, best rewards. So at a minimum risk, we're gonna make large rewards. So thank you guys. Thank you for watching. I hope that you have benefited a lot from this video.